Hello there. Welcome back to grade 12 counting. And we are going to look at a controlled test one of March 23, 2023. So basically, this is the question paper that we are going to look at. We are going to look at question is on income statement video. The Amaleka Limited, the financial year ended on the complete statement of comprehensive in February 2022. And our question is whereby we give an extract from. This is the pre-adjustment tables that you just need to browse through before you attempt the question. See that this is what we have. Then moving on to further information given according to the question, you're given adjustments and additional information, whereby it ranges from information A going down to information H on this page, and we have a continuation of additional information whereby we also have information I, J, K, and L. So you see that our question at the ending of the information that we are given. So for our answer section, I will see that this is going to be our answer section for what we're going to. So obviously we are going to start with our 100,000 being pre-entered, so we can just refer back to the question whereby 1,000 you're having that entered. So we have to look for any data allowance or sales returns. We've got data allowance here. So we've got 19,200. So we're going to subtract this 19,200 a year minus 19,200. So basically, that's what we have on that part. And I will look for additional information if we have further information that we have that needs to be adjusted for sales again. So going to our additional information, you'd see that that's our additional information. So if you go to additional information B, you'd see that we can say it goes at a markup of 360,000 rands was allowed. See that this discount will be already subtracted. We're going to adjust something. It is not of 49,600 rands issued to it as an input. So we are having a credit note. Remember, a credit note it represents obviously it's going to reduce. So basically, we are saying we are going to subtract 49,649. 1,600, and then we the total that is two. You see that the figure that you are going to get is 99. When you enter the first 49,600, you are trying to that one another 49,600 data. So since it will be credit amount for data for our sales, so on the calculation of our sales. So we come in. So in brackets minus 90,200 minus 99,008 million 681,600. So basically that's the figure that we have. And we can just try to verify that calculation if it's a correct calculation. Whether we are saying 8,800,000, and then we subtract 19,200. And then we subtract again 99,200. Obviously, you're going to get your 8,681,600. So it's a correct figure that we have. Then we've got, if you go to cost of sales now, if you are given a figure for cost of sales in our list of balances, so if you come here, you'll see that cost of sales is given as a it's given here as a question mark. So basically, it means we have to go to additional information if you've got any hint in terms of calculating the cost of sales. So if you come to additional information, you'll see that if you come to information A, information A, you have 60%. Remember, we are supposed to say our costs get your selling price. So basically, this is the formula that we have in terms of finding the selling price involving our markup. So we're given the markup of 60%. Obviously, this becomes our hint. But we are told that there was a trade discount that is there. Remember, trade discount is not shown in the books of accounts. When it's removed from the total amount, and then we do not see it in the books of accounts. So basically, we are saying the figure that we are having for our sales of 600, the trade discount was already subtracted. So what we need to do, we need to add a markup. So we are going to say 8,688,360,000. Then the answer that is so we can now be able to find our markup. So in this case, we are saying, remember the cost price is always 100%, and then we add our markup. We are given it as 60%. 60%. So basically, this is the calculation that we have. So having done that, now we can now be able to make our representation whereby we are saying the figure that we are looking for is the figure for cost price, which is 100%, and the figure that we are given is the figure for our selling is equal to the figure that we have here, which is 8,681,600. So we say this equals to 8,600. Then the figure that we are looking for is the cost, which is 100%. So to find it, we say the figure that we don't have is 100, supposed to be the percent you put it. We calculate it in that way. We see that the answer that we are supposed to get there is going to be 5 million. Remember, we have added our 360,000, so it means that we are supposed to add our 360,000. So basically, here we're saying here we're supposed to add our 360,000. So basically, this we are supposed to present it in the brackets, whereby we are saying by adding, we can start by adding 8,681,600 plus 360,000. And then we get the sum there that we are supposed to multiply there. So we say 8,681,600, and then we add 360,000. Then we are going to get your answer is 9,041,600. So that's how we are going to calculate it. And when you calculate it there, you're going to get your answer as 5,651,651,000 is your final answer. So that's how we are going to summarize it in your answer section, whereby we are going to say in brackets, we are saying 100 over 160 and 41,000. 9,041,600. So obviously this is going to be the answer that you're supposed to get is 5,651,651,000. So basically that's how we are supposed to calculate it. So we can move on now to calculate our gross profit. And obviously our gross profit, we are going to say some brackets so that we are subtracting. So 5,651,000. Then the answer that we are supposed to get is going to be 3,030,600. So basically, that's the calculation that we are supposed to come up with. Then we can go to the next part, which is we are going to add that. So under other operating income, we are going to start with the figure for rent income, whereby if you refer back to the list of balances, you'd see that our rent income, we are having it here is 70,500. And obviously, from there, we can try to check in terms of our additional information, if you have got anything that is additional information, and try to see. So we can go from additional information A, going down, checking if we have got anything that is affecting our rent income, going down up to where we have information L. So you see that we do not have anything that's mentioning our rent income. So obviously from that, we can take the figure that we are having in the list of balances. So so this is the procedure that we are supposed to take, whereby we are supposed to first take the figure that we are having in the list of balances. Then we check if we've got any adjustment that is affecting that figure. Then if you do not have any adjustment that is affecting that figure, you can take the figure as it is in the list of balances and put it in the statement of comprehensive income. So in this case, our rent income, we have 70,500. So we go to our answer section. So we are going to say 70. Then for provision for bad debts adjustment, we are supposed to figure for debtors, which is 186. And then we check if we have got any adjustment that is going to affect. Go to our additional information, you'll see that for 1,600 is recorded as an invoice. So obviously, we said 1,600, and the figure that we got was 99,200. So we are first supposed. Also, if you go to information C, we are given a data is left the country, his account must be written off. So this is a bad debt that we have, and we are supposed to subtract again 42,000 from the debtors control figure that we are having, and the one that we are supposed to provision for bad debts is going to be the outstanding debtors balance, and then we multiply by 5%. So we can start from there. So whereby we are saying the figure that we are given for debtors control is 186,000. So we're going to say 186,000 subtract 99,200, which is this figure, and also we subtract for the bad debts we got 42,000, and then we also subtract 42,000. So we can try to calculate and see what we get there. So by saying 186,000, and then you subtract your 99,200, and then obviously if you subtract your 42,000 again, you're going to get your figure as 44,000, 44,800%. So we're going to say now 800. So the figure that we get, you multiply by 5%. Of course, 5% is a decimal, is 0.05. And we are going to get your answer is you're going to get your answer is 2,240. So this becomes your answer as well at the level of provision for bad debt, provision for bad debts for the previous period, which we are supposed to get, and for bad debts that we have here, which is 3,240. So if you come here, you see bad debts has moved from 3,200 to 3,240, which is for bad debts, which is, so we see that this is a decrease. So we see that this is its income, it becomes an expense. It becomes an expense, less expenses. So in this case, we've analyzed that it's a decrease. So it's a decrease of 3,240 minus 2,240. So we can just go and summarize that. In our in brackets, we're saying we subtract 2,240. And from there, you see that the answer that we are supposed to get it's 1,000 to 70,500, so that we can get the total for other operating income. For other operating income will be 71,500. So from there, we can also be able to get our gross income by saying our sales, by saying our gross profit. If we say gross profit, so if you add 3,030,600, so you add these two figures, you get your gross income, which is supposed to be 3,102,100. Then from there, we can now be able to go down to calculate our total for operating expenses. So we are going to start by trying to see in terms of our salaries and wages. So on our salaries and wages, we're given it is 681,600, which is the figure that we are given in the list of balances. So if you come here, you see that which is the figure that is pre-entered in our answer section. So estimate that is affecting our salaries and wages. So if you go to Excel information, we can just try to go to our Excel information. We go down Excel information by Excel information, try to check if we have got anything that is affecting our salaries and wages. So if you go down to F, we've got something that is going to affect our salaries and wages. So if we say one employee received a double salary by mistake from salary journal for February 2022, this must be reversed. The employee made a direct deposit to the business bank account as a refund on 20th February 2022. His normal salary details are as follows. So we are given the salary details, and beneath that it's our employer's contribution are part of salaries and wages account. So we've got also the employer's contribution that was also on entered twice. So what we need to do is to calculate the gross salary. Remember, we're given net salary. So net salary obviously is equal to our gross salary minus our deduction. So to find our gross salary, we are going to say net salary. Salary is 50,000, and then we pay as you earn. We enter 3,000. So we do that. We see that the answer that we're supposed to get, the answer that we're supposed to get there, as we say our 15,000. We add our 2,000 to get our 17,000, and then we add 3,000 to get. So we're going to remember we're saying it was added twice, so we're going to subtract. It's going to be said it's not part of our gross salary. And then we're going to summarize it in our answer section by saying our 681,600 that we are given. Then we subtract our 20,000 for employers' contribution. So if you calculate it like that, you see that the answer that we are supposed to get is 657,600. 657,600. So basically, this is what we have, and then we can move on to our advertising and try to see how best. So going to our next expense, which is going to be our advertising. We've got 60,000. Obviously, 60,000 is the one that is entered in our list of balances. We go there. I'd see that for advertising, we have advertising here, which we are given as 60,000. So we are saying advertising, and the figure that we have is 60,000 here. So we now try to see again if we have got either. So we can try to check the. So if you go to our G, we have got advertising of 40,000 rands, consists of a month-to-month contract with local radio station. Advertising was paid for 13 months from 1 November 2021. The contract rate was decreased by 10%. So basically, we now know that we have got 14,000. We have got 40,000 for advertising. The extra month that needs to be subtracted from the total for advertising. That doesn't belong to this period. Remember, this advertising amount for the 13th month represents a payment in advance or a prepayment, which is supposed to be subtracted. So we can just come up with an equation that is going to lead us to our answer. So here we can just maybe try to remove this, but we can create some space here. So from there, we are saying the total is 40,000. So we are going to say 40,000 is equal to, we are told that from 1 November 2021, that's when the contract was decreased. So let's count the number of months before the contract was decreased. Our year is ending 28 February 2022. So it means the previous, the opening date is going to be at the 1st of March. The 1st of March until we reach when the rate was declared, May, June, July, August, September, October, then 1 November it was decreased. So we are saying 1, 2, 3, 4, 5, 6, 7, 8. As we are saying from March, as we said, March, April, May, June, July. I've got 8 months before it decreased. So it decreased being X, so that we can now simplify the calculation, whereby you're saying it is equal to 8x represents before it decreased, and then we add after it decreased. So after it decreased, we're going to count in November, December, January. 1 extra month is going to be for 2. So after it decreased inside 40,000. Remember, we're going to say 100% to your 90%. Then your 95 months times 0.9, which is 0.9x. Remember 9x. So we're saying here is plus 5 months times 0.9x. So basically we can try to simplify it further by saying 40,000. You see 5 times 0.9, you're going to get your answer is then we can add like terms whereby you're saying 40,000. So and then we can always divide by 4.5 both sides so that we can live with we can remain with our x one side. So we said 4.5 into 40,000. We can as well try to calculate that. Whereby we're saying 40,000 divide by 12.5. And you're going to get your answer is 3,200. Increased by 10%. But after it's much. Remember, it was now 0.9x after it decreased. So you're going to say 0.9 times 3,200, which is going to be 2,000, which is going to be 2,880. So here it becomes 2,880. So this is the amount after it decreased, and it's going to represent the subtract from the total for advertising. So remember, we are 60,000, and then we subtract 2,880. So basically, come here. We have 60,000 pre-entered, then you say minus 2,000. 800. By subtracting there, you see that the amount are 1,120. So basically, that's what we adjusted for a further bad debts that we are given in additional information, whereby OTC is saying a data P Malan with outstanding balance of 42,000 rands is left the country. His account must be returned off. So this is representing our bad debts. So we're going to add to the amount for bad debts that we are given there, 42,000. Then we add it to 6,730. So we say plus 42,000. And then obviously we close 8,730. What 8,730. And then we go to packing materials. First figure is 15,000. Of which, if you go there, you'd see that 15,000 is the figure that we have for packing material that was bought during the period. Remember, under the nominal account section, it represents the transactions that took place during the period. So packing material for 50,000 represents total packing material that was purchased during the period. So the one that we need in the statement of comprehensive income is the packing material that was used, that is going to represent the expense. So what was used, we are going to say what we bought is 15,000 minus what remained at the end of the period. But if you go with the balance that were given at the beginning of the year, so the balance sheet account section represents balances at the beginning of the period. So we have got also consumables on hand, packing material. So these were packing material that were there at the beginning, plus what we purchased during the period, minus what remained at the end of the period. And then we see the one that was used, which is going to represent the expense, which we put under less expenses. So we're going to say 820 plus 15,000. So we are going to add our 820 here to 15,000. Getting the additional information. Okay, we are just going to say minus across our bracket. The answer that you are supposed to get there is going to be 9,800. Right. Then from there, we can as well try to pick other expenses that we are given in the list of balances. We come here, you see that our account section going down 50,000. Then we check if we have got any adjustment that is affecting our director's fees. If you don't have any adjustment affecting director's fees, we take it as 550,000 going down. If you've got anything that is affecting our director's fees. You see that we cannot see anything. Then we got there, we are entering it now. So you see that we are not seeing anything. So it means the figure that we have for director's fees, which is 550,000, is the one that we are just supposed to put in the statement of comprehensive income. So here we are saying director's fees, and the amount that we have is 550,000. Right. So this is what we have. Then from there, we can as well try to go to the next expense that we have. We've got audit fee 1,410. So we check again, additional information, anything that is affecting our audit fees starting from A going down. We see that we cannot see. And we check again here, we see that we cannot see anything. Though it means we are going to take the figure as it is, 188,410, and put it as our audit fee. So we are saying audit fees, and the amount that we have is 188,410. We check the next that we have from audit fees. We have under operating income, interest on interest income after net operating profits, and then we have got interest on loan. Again, we adjust it after net profit, and then we have advertising. We did adjust it. Then check again if you've got any adjustment that is affecting our insurance, starting from A going down. We check, see that we are not seeing anything, and here we're not seeing anything. So we take the figure as it is for insurance, which is 14,700. So here we say insurance 14,700. We did adjust that, and then packing material we adjusted. Then we got standard expenses. It's a question mark. So it means for standard expenses, we are just going to leave it in blank, and then we come back to find it as a balancing figure. So we can just write standard expenses to find it as a balance figure. But obviously, we have another expense that obviously won't be listed in our list of balances. We have got depreciation. Depreciation as follows: on the vehicles, first annum on the credit on 1 June 2021 was 60,000 rands. This is already it. So let's take notes. So it means on our vehicles we have got no other additional information. We are just going to say 50% of cost. So before calculating a depreciation using cost price, let's take note of that. Take note of the net book value or the book value of that vehicle. So if you come here, you see that for vehicles we are using. We can check here. Cost is 800,000. So book value is equals to your present of vehicles 680,000. So let's try to calculate that 800,000 minus 680,000. So you are going to get your answer is 120,000. So this is your book value before calculating depreciation for the current fee. So let's take note of a book value before you start calculating when you're given it at cost price. We are using the calculation of depreciation at cost price. Because remember, the depreciation amount that you might calculate for the period might be more than the book value. So remember, we cannot have a scenario where we are having book value being a negative book value. It's always supposed to be positive. So that's why we have to take note of the book value amount. So in this case now, we found that our book value is 120. Then we can now be able to calculate our depreciation by saying 15% of cost. So we're going to say 15%. Remember, our cost is 800,000. So 15% is 100,000. So let's try again to calculate and see what we get there. Right, if you say 15% of 800,000, you're going to get 120,000. You see now, this is the depreciation according to calculation using cost price, which is straight line method. We have found that the depreciation amount is equal to the book value. This is our book value. It means our book value for the current period, at the end of this current period will be 0, which should not be the scenario 20,000. We should put a depreciation that is, so we are going to say 120,000. So by subtracting there, you see that the depreciation is 99. So this is going to be the depreciation for the period. So this is the one that we are going to put here in the calculation of depreciation. We say depreciation. What's depreciation? We're going to say the one for vehicles plus the one for equipment. So this one is 119,999. And then we calculate the one for equipment. So what we are going to do is for equipment, we are saying 10% or per annum on diminishing balance. But we're having a new computer which was purchased on credit on 1 June 2021 for 60,000 rands. This is already been recorded. So what this statement means when they are saying this has already been recorded, they are saying this 60,000 is inside the cost for equipment, which is 60,000 is inside the cost, which is 200,000. So we are going to calculate two depreciations there, whereby we are saying depreciation for the equipment or the equipment that was there for the OA, and then the equipment that came during the year, which is 60,000. So to get the cost for the list of balances minus the value that was for additional equipment, which is 60,000. So we're going to say equipment 200,000 minus 200,000 minus 60,000. Then you get equipment that was there for the way. So we're saying 200,000 minus 60,000 equipment that was there for the way. So if you sub, so basically that's what we have. 200,000 minus 60,000, and then you now, and then remember we're using diminishing balance, and then when it times book value, accumulated depreciation. So calculation of book value here, we are going to say our cost is 140,000, so balance which is 37,000. So subtract 37,000. So let's try to see what we get. 140,000 minus 37,000. Right. We are going to get our amount is 103,000. So this is our book value, 103,000. So from there, we can now be able to calculate. Remember, the rate is 10% per annum. So we're going to say depreciation now is equals to 10 cents, which is 10 over 100 times 103,000. Then you're going to get your answer is 10,300. So this is the depreciation for the old equipment. So for the new equipment now, we are going to say 60,000 times 10% times the number of months that this computer stayed. And remember, let's start by calculating the number of months. So it came, the computer of June, then in July, August, September, October, November, December, 1, 2, 3, 4, 5, 6, 7. Verify the number of months, 1, 2, 3, 4, 5, 6, 7, times 9 over 12. So here we are saying times 9 over 12, which is the number of months. So we can just try to calculate and see what we get. Whereby 10% of 60,000, you're going to get it as 6,000, and then you multiply by 9 over 12. And you are going to get your answer is 4,500. So your answer is 4,500. So total depreciation equipment plus depreciation for the new equipment. So basically we are saying total depreciation for equipment now equal to 10,300 plus getting us 14,800. So this is depreciation for equipment. So 14,800 is the one that we are supposed to add here to our depreciation for vehicles. 800. Get your answer is 134,799. 134,799. So basically that's what we have. So from there, we can now be able to try to see how we can find. Remember, we've got a missing standard expenses, and also if we don't have standard expenses, it means we are not going to get the total for operating expenses. And then from there, we can also not be able to find the figure for operating profit. So we can go to additional information to see if we've got any hints in terms of calculating those missing figures. But if you come to, let's just try to see where we can have a hint of calculating. Remember, you've got information coming here. If you come to K, it's saying operating profit is 50% on turnover. And our operating profit is the one that we have here, this 1.5. And then we multiply the figure for turnover. The figure for turnover that we have is for the figure for sales, which is 8,681,600. So here we multiply by 8,681,600. So I'll try to calculate it like that. And you see that the figure that you are supposed to get there is 1,302,240. Yes, 240. So this is the figure for operating expenses. So remember, to get our operating profit, we are supposed to say gross income minus operating expenses. Then we get our operating profit. So to get our operating expenses again, we are going to say gross income minus operating profit. So basically we are saying 3,102,100 minus 1,302,240. And then the answer for total for operating expenses that we are supposed to get is going to be 1,799,860. And this one is, if you subtract it, you get your operating profit. So from here, we can now be able to find the figure for standard expenses, whereby we are going to say the total for operating expenses, 1,799,860 minus all what we have inside the box, we subtract all the expenses. Then we get your figure for sundry expenses. So here, if you calculate it very correctly, the figure for sundry expenses that you're supposed to get is 28,401. So basically, that's what we have. Then from there, we can go to the next figure that we have is interest income. But interest income, we have it in the list of balances, whereby we are being told that interest on fixed deposit is 80,000. This is our interest income, which is our 80,000. So we can now be able to adjust for our interest income, which is 80,000. So we come here, interest income, and we put our 80,000. So here we're saying 80,000, and then from there, we can now be able to go to our operating profits plus interest income. And then you get, you're supposed to get your 1,382,240. And then we go for interest expense, and we go according to interest on loan is the interest expense here. We are given it as a question mark here. So we also need to find it as a balance profit before taxation with nothing taxation. But if you go to additional information, you'd see that we are given that income tax for the financial year was calculated as 360,000. So obviously taxation is 360,000. So we can straight away put our 360,000 there, whereby you're saying taxation is 360,000. And taxation we subtract, given it is 30%. So what we are saying is, we are saying 30% is equal to 360,000. In terms of our representation, we are going to say our taxation is 30%. Net profit before taxation is supposed to be 100%. Then net profit after tax is 100 minus 30, you get your 70%. By saying to get the net profit before taxation, we're going to say 30% is equals to 360,000. Then the figure that you want is 100%. So it's equal to more. So we just say what we do denominator multiply by 360,000. And you see what we are supposed to get. So basically we are saying 100 divided by 30. The answer that you get, we multiply by 360. And then you see that the answer that we're going to get is 1,200,000. So it means net profit before taxation is what the tax becomes 6. And then from there, we can now be able to find our interest expense by saying interest expense. Now we are saying to get our net profit before taxation, we say operating profit before interest expense minus interest expense, then we get our net profit before taxation. So to get our interest expense, we now say operating profit before interest expense minus net profit before taxation. So we are saying 1,382,240 minus 1,200,000. Then you get your answer here. Is interest expense is 182,240, which we show is in brackets as we are subtracting. So basically, this is what we have on that part. And this is the completion of our statement of comprehensive income, or the income statement that we have according to this question paper of March 2023. So I thank you for listening, and hopefully the video was helpful. And please, let's not forget to subscribe and share to our channel. And let's not forget to share the link to our colleagues who are doing Grade 12 accounting. And let's take note that more typical examination questions will be uploaded on this channel. So let's stay tuned. As for this video, I'm signing out. I will meet again in the next video.